Welcome to Mad Money. Welcome to Cramerica. Other people want to make friends? Hey, listen, I'm just trying to make a little money. My job is not just to entertain, but to explain. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. President Trump better be a much tougher negotiator than President Xi, because right now we're so hooked on China, it's almost hard to believe. That's why it's so worrisome when the president posts on Truth Social about the negotiations, as if there are any real negotiations going on at all. Every day I hear some companies say that it's doing its best to wean itself off China, but we depend on so much. We depend on them for manufacturing, on our goods, our raw materials, that it's just not easy. Sometimes it can't even be done. As the president said in his Truth Social posting, quote, I, like President Xi of China, always have, always will, but he is very tough and extremely hard to make a deal with. Now, with the back half of that post in all caps, followed by 3 exclamation points. Now, that's a serious analysis, especially for 2:17 a.m. Now, if that was the only action for today, I think that everything would look a lot worse at the close. We did dodge a bullet. The Dow off 92 points, S&P advancing 0.01%, and the Nasdaq gaining 0.32%. How bad is our Chinese addiction? To me, it's relentless. You know what? It's like fentanyl. I want you to consider these dependencies. This morning, the Journal reported that our automakers are racing to find a workaround to China's stranglehold on rare earth magnets. The Journal says several traditional electric vehicle makers and their suppliers are considering shifting some auto parts manufacturing to China to avoid looming factory shutdowns. The Journal continues, moving production to China as a way to get around the export controls on rare earth magnets could work because the restrictions only cover magnets, not finished products. China controls 90% of the world's supply of these rare earth metals that go into these magnets. Now, granted, these are incredible materials, but it's kind of crazy that we allowed our F-35 jet fighters to rely on something that China has a stranglehold on. I was shocked at this piece. It's worth reading. It's must read. This stuff is the exact opposite of what the president would like to hear. Now, we've heard from a number of retailers that have been crushed by the tariffs. I was surprised by how quickly both Dollar General and Dollar Tree moved away from China, but they got dinged, especially the Dollar Tree. Best Buy is absurdly dependent. As CEO Corey Barry said on her call, while China remains the #1 source for products we sell, we currently estimate the percentage of cost of goods sold it represents approximately 30 to 35% compared to the 55% metric we shared in March. All right, Best Buy clearly going in the right direction, but it has to go so far that it's hard to imagine the company being weaned off of Chinese merchandise anytime soon. Walmart, listen to this. Now, Walmart imports $50 billion worth of goods. And now, there have been a lot of false stories about there. Less than 25% are from China. Okay, that's the real skinny. But Walmart's so big, that's a big number. Target's trying. On its conference call, they said back in 2017 they were 60% China. They think they brought it down to less than 25% from year end. But that's still a lie. Oh, Stanley Black & Decker's working furiously to get out of China. They're down from about 40% to the mid-teens. They hope to be out of China in 12 to 24 months, but it can't happen fast enough. Apple's pulling off something amazing, moving about 20% of their iPhone manufacturing to India, but the rest are still coming from China. Still, the White House doesn't care. They want those phones made in America. So they're threatening a 25% tariff on the ones from India, not much lower than the current tariff on phones from China. What a shame. Apple is a huge employer in China, and China is a huge market for Apple. But the White House is making them leave, and they're not even getting any credit for it. If Trump wants leverage with China, he should be doing everything he can to make Apple move its manufacturing to literally anywhere else and not tariff them. There's another wrinkle here. Some in the White House believe that allowing imports from Vietnam might give China a stealth way, a backdoor to get around the tariffs. Now, that's why Vietnam's tariffs from Liberation Day is 46%. That is crazy. China and Vietnam haven't been buddy-buddy since the early 70s. They still have periodic border disputes. It would be easy for our government to audit American companies in Vietnam to see where the goods originate, where this stuff comes from. Let's be a little more rigorous, please. In Trump's first term, moving from China to Vietnam was the right move. Now it's dead wrong. Retailers behind the scenes are furious, but who wants to be called out in this environment? So how could the president turn around these negotiations with the Chinese? Okay, so I've been thinking about this. I always like to be constructive. I'm a constructive fella. Let's start small. It's not electric vehicle magnets and rare earth materials, but our government sent a note to Enterprise Product Partners, stock I like very much, with its pipeline company, recently that flagged its exports of butane and ethane to China. The White House claims they pose, quote, an unacceptable risk of use or diversion to a military end use. Now, going forward, licenses will be needed to send these key natural gas liquids to China. Who knows if it's going to issue them? This stuff is used to make plastics. Now, you know that China makes a lot of plastic. It's strange that propane, a big feedstock for plastic, isn't included. Still, it's potentially a really big deal. As Russia Brazil from RBN Energy points out, quote, this has the potential to ruin the U.S. ethane market and disrupt global flows. But the U.S. is the sole source of long-distance ethane exports to China, end quote. Hey, that's some leverage. Let's talk about that. That's cool. Then there's the $50 million items that China needs, wants, and has to have. I'm talking about the first, Boeing planes. The Chinese need planes very badly. If they're denied our planes, they can't just switch to Airbus. Airbus has got to wait this longer than Boeing, or maybe, I don't know, you put yourself in the back, all right? Hey, how about turbines for power plants? GE Vernova has installed 240 gas turbines in China. They go for about $50 million a pop. Just servicing these turbines gives us some cards to play. China needs these, especially if anyone ever stops. Anyone maybe just realizes that they're making all these coal plants and does something to try to stop it. Now, those aren't low cards. They're kind of, I don't know, maybe 8s and 9s. You can split them if the dealer has a 4, but I don't think she's got a 4. He's got a king showing. Now, there are some other things that could work out. Boeing sold out till 2030. GE Vernova might have room to expand its capacity, but there's so much demand from the American hyperscalers that they might not have time for China. Maybe slot both of these in. We only have one ace in our hand. And apparently we don't want to play it, the chips from Nvidia. Under the previous administration, Nvidia was allowed to sell China high-quality chips, but not their best stuff, which was reserved for America and a bizarre list of 18 friendly countries. Now the Trump administration won't even let Nvidia sell their second or third best stuff. As CEO Jensen Huang said on our show, it's logical to presume that China won't use these chips for the military precisely because they're American chips. It's the same way the Pentagon would never use chips from Huawei. So what is the military risk here? Jensen says that there's $50 billion in AI semiconductor business up for grabs in China. And Nvidia used to have 95% of that market, but today it's down to 50%. Sounds like the Trump administration would like it to go to 0. The Chinese are desperate for these chips. They could buy them from Nvidia, which has the capacity to build them now. And Nvidia could repatriate the money to build more plants right here. It's an elegant solution that I'm providing, but I fear the White House just doesn't care about my solution. Still, if Trump wants to win this game, he may have to show his trump card, Nvidia. As I see it, the others just don't make for a good hand. You have to play with the cards you've been dealt. And for decades, our government did everything it could to encourage outsourcing to China. They left us with a pretty lousy darn hand, both Republicans and Democrats. Between Nvidia and Apple, Trump has a lot of leverage, but he doesn't want to use it. Those two companies seem hostage to totally different agendas inside the White House. Bottom line, I just hope that Trump's friendship is requited by Xi. We may need to change the rules or start playing a whole new game. Of course, the president could always fold, and Wall Street would love it. But I don't see that happening anytime soon, nor should it. Hey, why don't we go to Stafford in California? Stafford. You're with Cramer. What do you got?
Hey, Cramer. It's Stafford here. I wanted to know what your thoughts on Viking Cruises is.
Okay. I like Viking, but I thought they were tepid when they came on, and therefore I'm going to send you to Royal. I think RCL is now the gold standard, and that's the one I want to own. Hey, oh no, the music? I went on too long. Hey, that happens. It's not a show that it's not like a usual show. What can I tell you? I see things, I say a lot of stuff, and it just goes into my head because it's non-linear. All right, all we can hope is that Trump's friendship is requited by Xi. Otherwise, we have to maybe reevaluate our entire playbook. Or maybe anytime. Last night, HP Enterprise reported what seemed like a strong quarter would set the stock higher, but it gave back almost all its gains today. What gives? I'm digging into the story. Then $1 store is making you dollars, and the other one is losing the dollars. I'm sharing why there's such a dichotomy between the discount retailers. And CrowdStrike is down nearly 6% on earnings downgrades and fall from its outage. Are investors getting a buying opportunity in the high-quality cybersecurity company, or is the quarter a warning? I'm going to go straight to the source with the CEO. I want you to stay with Cramer.
Don't miss a second of Mad Money. Follow at Jim Cramer on X. Have a question? Tweet Cramer. Hashtag Mad Mentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.